This is not financial advice. I'm recording my thoughts about 4 stocks that I would buy now. Number 4 is Tesla. As of today, that is December 8th, 2022, it's trading at about $173 and I'm estimating $430 in 2026, and that represents about 150% gain in 3 to 4 years, which is a good gain. If you had watched my previous videos about Tesla, I came up with this $430 price target in 2025 with an assumption that they would make about 5 million cars and achieve 20% net profit margin. With Giga Berlin and Giga Austin, Tesla will have a capacity of about 3 million to 4 million cars, and they would have to come up with 1 or 2 more Gigafactories by 2026 to get to that 5 million car production. So I'm confident that they can achieve this. I don't see any hurdle for them to not achieve this target, so therefore I feel safe at this price. So I'm a buyer of Tesla stock at $173. Currently at $173, Tesla has a PE ratio of about 54 and their forward PE is 35, which is really expensive. But since Tesla is growing north of 30%, the PE should get very reasonable in the coming 2 to 3 years. Number 3 is AMD. It's currently trading at about $69 and I'm estimating it would reach about $150 in 2026, and the gain is about 117%. AMD taking market share away from Intel in the CPU market, and it's competing with Nvidia in the GPU market. Personally, I wanted exposure to semiconductor industry and AMD seems to be the best option for me. It's very reasonably valued and I don't see any hurdle for it to get the double-digit growth in the next 2 to 3 years. At $69 stock price, AMD has a PE of about 44 and its forward PE is close to 20. So the stock is definitely not cheap, but when compared to its peers like Nvidia, it's definitely at a very good valuation. So I'm a buyer of AMD at $69. Number 2 is Amazon. It's currently trading at about $89 and I'm estimating $240 in 4 to 5 years, and that represents about 170% gain. At this current price of $89, Amazon has a PE of 80 and a forward PE of 46. And I definitely think this is really expensive, but in my opinion, AWS itself should have a market cap close to $700 billion. So the e-commerce business is currently only valued at $200 billion because their total market cap at the moment is about $900 billion. And my price target of $240 assumes that the AWS will grow at about 30% year on year and achieves 30% net profit margins. At the moment, the 30% net profit margin is definitely possible, but the 30% growth may not be possible next year. But I'm confident that as the macroeconomics get better, the growth of AWS should get back to 30% plus. So I'm still sticking to my $240 price target for Amazon in 2026. So I'm a buyer of Amazon at this price. Number 1 is Alphabet or Google. It's currently trading at $94 and I'm estimating $200 in 2026. That represents 113% gain. And at this $94 stock price, Google has a PE of about 19 and the forward PE is 18. So it's definitely very reasonably valued, and I don't see any reason why anybody could disrupt their search business or YouTube. The $200 price target that I have do not consider their cloud, and in my opinion, I don't think they can compete with AWS or Azure, so I'm not going to include that anyway. So with conservative assumptions, I'm seeing a 2x with Google, so I'm a buyer of Google. Having talked about these 4 stocks, in the short term, these stocks can definitely go lower, which is why I'm only buying them on red days where the market falls significantly, and I'm in no hurry to accumulate a big position. So I'm going to slowly buy the stock whenever there is a bad day for the market. I'm confident that I could get a 2x with all these companies in the next 4 to 5 years with low to medium risk. When there are great companies like this which have incredible moat are on sale, I have no reason to chase that 10x stock with very high risk. As I mentioned before in my previous videos, I prefer a 2x with low to medium risk than that 10x with very high risk.